The month of July brought a ton of confusion to the Ocean City real estate market. We had mortgage rates rising. We had prices still going up. We expected things to go much differently. So in today's video, I want to rewind a little bit, talk through what happened not only last year, but in July's past, what we expected to happen in July, and then dive deep into what actually happened. So let's get right to it. If this is your first market update, we do things a little bit differently. There are no platitudes and broad, oh, the market's hot, we got to do something quick. There's none of that nonsense. We're going to dive deep into the visuals and the data to talk through what happened, where we are, and what we expect to happen coming up. So this was a very, very confusing month, not just for everybody out there, but for me as well. Being the data heavy person that I am, I had a pretty good feeling based off of what we have seen in the past, specifically last year when we had mortgage rates rise over the summer and the corresponding activity change that we saw. So I expected things to go a particular way, and that would be with the number of homes going under contract going down, the number of new listings going up slightly, inventory starting to grow. But honestly, none of that happened. So we did have mortgage rates increase, and we're going to spend a minute on that now. So we're up around 7%. Some lenders may be higher, some may be slightly lower, but in general, we're sitting around 7%, which is where we were in the fall. Rewinding to 2022, we had rates start to go from 5 to 6 in the summer. People started pumping the brakes a little bit until we hit 7 in October. And that really changed things. So I had assumed, since we have now revisited that 7% range, we would have known what to expect. People would have pumped the brakes. That's not the case. Now, that all happened because the Fed raised their rates, their underlying rates, their prime rate, by 25 basis points. All that means they're not directly related to mortgage rates. Once again, when the Fed raises their rates, it does not directly impact the mortgage rates. It's not a one-for-one, but they tend to run in the same direction. So I'll get into what we expect coming up over the rest of 2023 on that front, because that's going to be a key factor. And as long as mortgage rates continue to stay high, we're really seeing the lock-in effect take a stranglehold on the market and inventory, or lack of inventory. I did a video on that. You can find that on my channel as well if you haven't already watched it, to understand what the lock-in effect is. I've covered it at length in the past, but in case you're new here, I want to make sure that I point that out for you. So inventory-wise, we're down 8%. Normally, what we see from June to July is a slight increase. There are fewer people able to see properties because they are rented by our weekly tenants who are so prevalent in Ocean City. And in general, buyers now can no longer get in for the summer, right? They've missed their chance. They can get in maybe for a week or two at the end of August. But by and large, that's why the spring market, from really starting in February through April and May at the latest, are so heavy, and that's the bulk of our activity, because people want to be here for the summer, whether that's to collect income or to enjoy the city for themselves. So being down in inventory in July is a little bit disheartening and a surprise. Days on market, I'm not going to spend too much time on this, but they're really creeping up at a snail's pace. Nothing to write home about. But prices, we saw a difference here. So over the past several market updates, condo prices, when we look at where prices are this year in a particular month, right, here being July, what happened in July versus July of last year, the condos have tended to be around 10% for a very long time. No matter what month I did the market update, looking back a year, we're up somewhere between 10 and 12%. Single family, for a very long time, we were tracking at 30+% year-over-year increases. A lot of that is because new construction homes, the volume of them and the sale of them really far outweighing what had happened in years past. But really, we took a huge step down last month into the low 20s, and now we dropped again down to 13%. And you're going to see why in the coming charts as to what that all means. But in short, we had a really, really busy month, particularly in the single family market, which resulted in what we're going to see on the next slide here. New listing wise, again, we're on a 2-month in a row decrease. And if we look back to what has happened in past Julys, right, we did have a decrease in July of 2022, just like we saw in July 2023. But prior to that, right, if we're talking 2021, we had an increase. In 2020, we had a big increase, but I'm throwing 2020 out the window because that was a complete anomaly. Now, when we looked all the way back to 2019 pre-COVID, we did see a slight increase. So in general, right, it appears that the trend has shifted so that July now, at least for the current moment, we may expect this to happen going forward. But a lot of these new listings, right, if we see where they didn't come from, it's in the townhouse and condo market. Single families are running fairly steady, reasonably speaking. But condos really took a dip for 2 months running, and that's a big driver because that's the most volume that we have in our market. Now, Looking at the pending sales, right? Again, the blue bars, I like to highlight them so it's easy for you to look back and see what happened compared to the month before. So in past June to July's, we've had slight decreases back to 2020, basically flat. But here we have a substantial increase. It's a 22% increase in the number of homes that went under contract in July. And keep in mind, this is in the face of rising interest rates. So for all the talk, right, and the general media, the nation at large seems to have a hard time figuring out what the story is or what they want to believe, because one minute it's we have a soft landing, and then there's one bad nugget that comes out information-wise, and so just kidding, a recession's coming, market's going to crash. This speaks for itself, right? An increase in activity is an increase in activity in the face of the headwinds that buyers are facing, being prices increasing still in Ocean City anyway, and interest rates increasing. What does this tell you? This tells me that this isn't stopping people. And I want to paint a little picture here for you because I've seen a kind of divergence over the past few months. Buyers that I've just started working with in the past, I'll say 3, 4, 5 months versus buyers I've been working with for longer than that. The more recent ones who have entered the market aren't as jaded as ones who have been in the market longer. They haven't necessarily been hyper aware of what the prices were just a year ago, 2 years ago, 5 years ago. And they seem to have less hesitation about getting into their dream home here in Ocean City because they don't have an anchor point that's really keeping them psychologically back. It's very hard human nature-wise to overpay, right, in quotes, overpay for something you could have had for cheaper if you just acted sooner. It's a hard thing for people to get over, and that's what stops so many people from buying here. But I think that divergence is interesting, and honestly, I would put a lot of this increase in activity onto a new cohort of buyers, not so much the ones who kind of turned on to Ocean City during COVID, whether they had been here before or not. This seems to be a new group. And I do want to dig into that a little bit further as the months go on to see just how right I am and where these folks are coming from. Now, closed sales, we had a steep decrease, which realistically was expected. That tends to happen. And overall, people don't want to close in July, right? They're either going to push for a close at the beginning or they're going to push to later in the year. A lot of it's new construction. So this, again, I don't read too much into this. This is a trailing indicator versus this pending sales being a leading indicator, telling us what's going to be coming in the next few months. So single family wise, this chart is a roller coaster. For a while there, we had months of inventory, basically how long it would take to sell every home that's on the market based off of how many are selling in a given month, increasing right here through February, March 2023. And we had a pretty steep drop off when a lot of the new construction homes were taken off the market. And I spoke to that in the market updates in the past. I assumed that they would come back on, right? This was a temporary kind of thing. This was not market fixing by any stretch, but just a way for developers to really not get hurt. They're waiting until builds are complete instead of trying to pre-sell from the jump. And that doesn't really seem to be coming to fruition at all. We have over 50% of the homes listed currently for single families are new constructions. 35 out of 66 are new construction. There is no shortage, and most of those that had come off the market are back on now. So we had a massive month of 20 homes going under contract, single family homes going under contract in the month of July, which is up substantially. And if I'm just going to take a quick glance, really that has not happened since April of 2021, where we had 22 single family homes going under contract. The next highest number over the past 12 months was 15 back in April and March of this year. So again, we're talking one or two here and there. Maybe it's not a huge deal because it's a small sample size, but that takes a huge toll on these metrics because the inventory isn't coming anymore, right? There's not an increase in single family inventory coming, but the demand took a big spike up. So that was an interesting, unexpected thing. Now, I think that may have a lot to do with the fact that those single family homes are no longer necessarily increasing in price, I should say, as they were in the past, going up, 20, 30% year over year. Now we're sitting at a more palatable 10 to 12%, which we've seen for condos, and we've seen those prices continue to increase. So now that, again, I've been saying this for months, I think we're at a relative equilibrium. I don't expect prices in single family world to come down, but they seem to be done increasing, right? New construction, I have seen a few of those offering some incentives, very, very few. And it's once they're already built, whether it's, a credit if you use their lender or whatever the case is. But there have been some incentives offered, which was not the case for a very long time. And that's not expected to be the case going forward. That's just to move some of the inventory that they have. We're not talking massive incentives either, but anything helps. So I think, and I expect this to stay roughly where it is for the foreseeable future. I don't see a big spike coming, and I certainly don't see a decrease coming. But again, if we go back to this months of inventory chart for a second, if this continues trending in the downward direction, right, we're sitting here right at about 6 months of inventory, and that is neutral. That's where it's not a buyer's market. That's not a seller's market. It's just balanced. If that's where we stay, then I expect we should stay balanced on prices as well. Now, days on market, again, basically flat, still well below where we were pre-COVID, but at a reasonable point in the 60s. Now, condos and townhouses, this chart somewhat reflects, right, what we just saw with single family world. If we quick jump back here, the curve is basically the same, right? But where we are on the curve, right, whereas we were above 6 months of inventory in single family world, here we have never crossed that over the past few years. And we are trending downward again. So demand is continuing to rise. Prices are rising. Inventory is falling. This is not a pretty picture for buyers. And days on market, again, we're inching up. There's no denying that, but we're still a far cry from where we were in the past and still a very low number, all things considered, when we're talking about compared to history. So let's project out to the future. This is the fun part. And again, I don't have a crystal ball. None of this is guaranteed. This is just my opinion based off of not only the data, but what I am seeing in my day-to-day job, right? Talking to buyers and sellers and closing deals. So mortgage rate wise, we expect there to be one more increase by the Fed in 2023. Now, they've changed their tune several times already this year. So that could be low, that could be high. But all things considered, another 25 basis point increase is expected at some point this year, based off of the Fed's own projection of where they want that interest rate to be at the end of 2023. So assuming that is going to come to fruition, the likelihood of mortgage rates coming down is slim to none. They may fluctuate, right? But I don't think we're getting below 6. There are projections out there that by the end of the year, they're going to be in the low to mid 6s. Is that a possibility? Sure, right? We were just there a couple months ago in the face of these increasing Fed rate hikes as well. So that's a possibility, but I don't expect huge relief for at least another year. But it all depends on inflation. It depends on the readings. And don't fight the Fed has been a saying for a very long time since the Great Recession, right, back in 2007, 2008. And I wouldn't encourage taking up that mindset either. Again, for the first few years of this housing boom, or whatever you want to call the period we've been living in for the past few years, a lot of people were, what goes up must come down, and it's just like before, and all of these opinions, and everyone's entitled to their opinion, but that's why I rely on the data. Based on what I am seeing, right, I can't logically connect a dot to where inventory is going to increase enough. That's going to bring us to our next point to really change the picture here. Inventory increase, the magnitude of what we just saw, 8% from June to July, is abnormal. Normally, we are flat to slightly increased by the end of July. And the fact that that flies in the face of what we should have expected is a little bit unnerving. And it makes me question what we're going to see here in August, right? Is it going to stick with the pattern, or is this another pattern busting period that we are entering into to where things just aren't going to align the way we thought they would? Whether you can call it people being irrational or whatever you want. But bottom line is, as long as people are not listing their homes, and there is not much of an incentive for the traditional move-up buyers to do that, especially as rates increase, not decrease, financially, it makes no sense. And until that happens, or if that ever happens, I don't know where the swath of inventory would come from to really change the dynamic. And the only other alternative is you can make an argument for demand falling off a cliff. But being in a lifestyle town, right, where memories are made, nostalgia is instilled in people, the right time is when a family is ready. It's not when the market dictates. And I have had families calling over the past few weeks, even again, in the face of all of this, basically saying, hey, look, we've been looking to do this. We've been talking about it, kicking the can around for years. And we're at this point where now feels like the right time for us. So we're exploring this. So there are always going to be people entering the market and making the decision that's best for their family. even if the rest of the market looks at things and says, this doesn't make sense, right? I expect it to change in the future. I'm encouraging people to make 10, 15 plus year decisions, right? We have to be smart. But you also don't want to wait for the inevitable thing that may never come either. So being cautious is something I've urged everybody, and being thorough, which is my specialty, and digging through everything, is a must to really succeed in this market and to determine if this is the right time for you. So from a pricing standpoint, again, I don't see much of a shift coming in the way of making it more affordable or more favorable. And something that I really want to drive home here is I am guilty of always looking at Ocean City in a bubble, right? This is the only market that I really serve outside of a few select circumstances. But when it comes to what's happening here, I have to remind myself from time to time to look what's happening elsewhere too. And we are not the only market where this dynamic is happening. The lock-in effect is everywhere. Inventory shrinking is in most places. I read an article this morning that the majority of markets where there's actually been a price decrease this year are on the West Coast, or west of the Rockies, I think it said. And most of the markets east of the Rockies have continued to see price stability or increases. So this is a broad issue. This is not an Ocean City specific issue. It's not a Jersey Shore specific issue. As much as I can point to, again, the dream being here and people making the decision that's right for them, this is happening elsewhere too. And that is incredibly important not to lose sight of. Otherwise, you may start to create a story that doesn't really exist, and that Ocean City is this, anomaly where the bubble is going to pop and it's just here and it's a matter of time. I think that's a dangerous narrative that can, and I know it historically has cost people their opportunity to get here on the island to make the memories that they want with their families. So that is where I'm going to leave it for today. And I hope you found this helpful. I'm happy, as always, to talk through whatever questions you have, whatever your scenario is. If you are thinking about taking a look to see what makes sense for buying in Ocean City or selling in Ocean City, I'm more than happy to share my 2 cents. There's never any pressure, no sales nonsense. I just want to help. So feel free to contact me any of the ways you see here, or as always, you can drop anything you want down in the comments, because if you're thinking about a question, I'm sure others are as well. So that is it for today. Thank you very much. If you haven't already, hit the subscribe button and the like button as well if you want more good stuff like this about Ocean City. Talk to you soon.